leader and godfather, the one and only Deepesh Mehta. But don't clap yet. Let me just give you the Google formal introduction. Here is Deepesh Mehta. He is the founder of Happy Investor. You all know that. FinServe LLP. He is also an author and a certified financial planner, and he has over 16 years of experience in mutual funds. He has done more than 250 investor awareness programs. He isn't just a financial wizard. He is Elon Musk's closest friend. तो पैसा के बारे में जानकारी तो बहुत है, no doubt about that. He, along with his team, is the magic makers of your wealth dreams. So let's show a lot of respect here. We're here because of him. Him and Sujata, they are the people behind all this. So guys, for 1 minute we'll be serious, show some love. Then we will make fun of him. I promise you. Deepesh Mehta.
So it's very great to see all of you here, and I'll be running a very small presentation. By the way, I just wanted to ask you, how was Vasundhara's session? Did you like it? Yes. Thank you. So, you have been investing in mutual funds, and, substantial amount of money has been invested. We know the data and the inputs of how our India is doing, our country India is doing. So through this session, I wanted to have some key points and make you understand some of the key data points on about our country India and why should you continue staying invested in mutual funds. So let me get started. We have three Indias. Okay? The rich India, who earns more than 4 lakh rupees per annum. The aspiring India, who earns between 1,65,000 to about 4 lakh rupees per annum. And then we have growing India, who earns about less than 1,65,000 rupees per annum. I'll tell you some data about these three Indias in the year 2015. In the year 2015, 90% of our population, which was 110 crores, were earning less than 1,65,000 rupees per annum. Now, this is the data from Income Tax NSSO, this is not my data. And the middle part, which is the blue one, that's about 8%. So about 10 crore people were earning between 1,65,000 to about 4 lakh rupees. We'll not talk about the rich India. Now in 2021, in next 6 years, if you could see, about close to for 51 crores, that's about 39% of our population, became aspiring India from growing India. So these are those set of people who actually got money for the first time. Focus on the middle part, the blue color, and it is expected that in 2025, 82 crore population of our country would be in that aspiring India bracket, which is 1.65 lakhs to about 4 lakh rupees per annum. So what's going to happen is about 80 crore people are going to get a lot of money in their bank account. Now this is very interesting because this was the same situation in US in the 1960s when the World War completed, and then in Japan in 1980 and China in the year 2000. The same situation is happening in India, where a lot of people are going to get the income between 1,65,000 to about 4 lakh rupees per annum. So essentially, a shift from lower income is happening towards the middle income. The good part is that not that this population is coming down, but this is actually reducing and this is actually increasing. And a growing middle class signifies the overall well-being and prosperity for a country. This is what I am excited, fund managers are excited, and we wanted you to know about this. Now what's going to happen? This is what our consumption pattern was in 1992. You could see we had one television, one fan and one bulb in a house. Now you could see from 1992 to 2007 how people migrated in their lifestyle. And from 2007 to 2017, for example, people had LCD TVs. And today in 2024, you could see households are having ACs, dishwashers, washing machine, fridge, smartphones. So a substantial shift is happening, and hence, if you could see, these are some of the products which we need on a day-to-day basis. India has the lowest consumption of these products. And if you compare this with China and US, we are completely underpenetrated. Today, just an example, only about 4% of Indian households have car. Whereas if you see in US, 81% of households drive a car. Now if you draw back that same previous slide, lot of money is going to come in that middle class who will be buying their first Hero Honda bike, who will be buying their first Maruti car, who will be upgrading to their first smartphone. And this is where wealth creation opportunity exists. So India's growth story will continue for next few decades because we are completely underpenetrated. So what will happen in the next few decades? Today, 65% of our population is less than 35 years old. Out of 140 crore people, there are 65% of the population who are less than 35 years old. Let's compare this with our nearest neighbor, China. India and China are the most populous country, have almost equal population. In the year 2020, the orange one is India and the blue one is China. So 64% of our population was working population. The same was the number with China. In the year 2030, our share of working population will be about 69%, and the next most populous country, which is China, that's going to shrink. This is because of the one couple, one child policy that China had 30 years back. They are going to face this kind of challenges in the future. And we didn't have such policies, and hence we'll be having more number of working population. In the year 2040, 64% of Chinese would be working, whereas 64% of Indians would be working, whereas only 57% of Chinese would be working. And till the year 2050, about 60% of India would be working. This is the only country in the world which has such a huge number of population base who would be working. About 3 months back, I was in Japan, and all that I saw was only about old people, about 85 years old. And I was told that about 2 lakh Japanese celebrated 100 years in the year 2023. Now this is where the exciting part comes, that some people do ask that will this wealth creation continue for the next 10 years, 15 years, 20 years, 30 years. The data is in front of you. Till the next 26 years, India population would be working, and when you have this younger generation working, lot of consumption happens. Look at your own house. If your grandfather, grandmother spends 100 rupees, you spend 500 rupees. The aging population spend less, and the growing and the younger population spend lot of money. When this spending happens, the wealth creation will happen. So India's growth story will continue for the next few decades. India is a story of many opportunities. There is an opportunity in housing sector, capital market, healthcare, banking, consumption, exports, manufacturing, technology. If you go to Russia, the only economy that works in Russia is oil. If you go to Dubai, you will see only tourism and oil. And if you go to some other countries like Venezuela or any other countries, you have only 1 or 2 sectors that do well. India is a country which will be having multiple sectors. So a foreign investor sitting in maybe in US and making some investment decisions, he gets an opportunity to invest in all the sectors in one country, which no other country offers except US. So we have exciting times ahead. Now look at India's manufacturing exports. This is a graph which says what is the labor cost. If I am Nike and if I have to manufacture some shoes, if I go to Korea, my wages per month is around $4,460. Whereas in India, it's only about $160. No? India is the cheapest country. If I have to manufacture a television and if I come to India, the cost of labor is very, very cheap in India. And no other country offers this kind of, you find labors only in this country and not in any other countries, only in the Southeast Asian countries. Now connect the dots, young working population, low cost advantage, what will this lead to? India has the capacity to export goods worth US $1 trillion by the year 2030. So the beneficiaries would be automotives, electronics, chemicals, pharma, and IT services. Now let's look at another interesting thing. The government introduced something called as PLI, production linked incentives. Now what the government has done is that the government has told that, hey, you Samsung, you come here, hey, you come here, you come and you set up a plant here, I'm going to give you some incentives, and I'm calling that incentives as production linked incentive. You come, you manufacture in India, I'm reducing your taxes, I'm giving you some other benefits for you. And the government has said that, for example, any company who come and manufacture home appliances, they will be getting about 40,491 crores worth of incentives. The government is openly calling and saying that please come, set up your production plant in India, give jobs to our Indians, and take the incentives and go away. We are in a very interesting time. This is the data of 2023. We have about 20 countries. These are G20 countries. India is the second fastest growing economy in the year 2023, just slightly lesser than Saudi Arabia. But if you look at other countries, Japan, Germany, Russia, UK, France, the big heavyweights are here. And India is only at the top along with Saudi Arabia, which grew at 7.2%. This is a data by RBI. Okay? So if you all have made wealth in your mutual funds, of course you all have made, this is because of these numbers. What could be some short-term risk? I don't want to be biased saying that, come invest in India, but what could be some short-term risk? Election outcomes could be some short-term risk. War in Ukraine, Middle East, India and its neighbors conflicts, inflation not cooling down India, sudden terror attack can happen anywhere, abnormal climatic conditions and any global health crisis could happen. This could be some of the short-term risk. That is why we say, आपका portfolio थोड़ा सा volatile रहेगा. Risk will be there. We should not be escaping from risk, but we have to manage risk. One can't escape risk, one should not be escaping risk, but he should be managing that well. Let's look about Indian mutual funds. What is the potential growth? Very interesting data. I'll spend some time here. Let's look at the year 2015. For every 100 rupees that an US investor invests, he puts 143 rupees in mutual funds. If an US investor has $100, he would be investing $143 in mutual funds. Whereas India, where he was investing only about 15%, for every 100 rupees that an Indian puts in a bank deposit, he puts 15 rupees in mutual funds. Now this data has improved. This 15% has grown to 25%. So today, as of today, Indian mutual fund industry is about 50 lakh crores and Indian bank deposit is around 210 lakh crores. Now remember, banks are 100-year-old institutions. In the last 100 years have accumulated 210 crores, and mutual funds have already reached 25% of what the bank deposits are there in India. Okay? So we have interesting times coming forward. We have a long way to go, signaling immense opportunities. Of course, mutual fund investments are subject to market risk. Please read the offer document carefully before investing. I have to tell this as a disclaimer because this gets recorded. Okay? We are a regulated organization. So the day is not far in India where the number of mutual fund investors will be higher than the number of fixed deposit investors. Hence, we are excited here. We have been asking you to invest your money. Be an early mover in mutual funds. You are already an early mover in mutual funds. More wealth creation opportunities will be coming in the next few decades to come. Thank you so much. Thank you. Okay. Okay.